Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Now into the third consecutive day since the topside rejection, the Australian dollar continues to weaken after the Australian June quarter inflation report showed price pressures have eased. According to the Australian Bureau of Statistics, the headline inflation slowed to 3.8% from 4%, while the RBA's preferred mean of underlying inflation, the trend mean, headed steady at 3.6%. Although underlying inflation remains above the RBA's target, the softer than expected result reinforced the view that previous rate hikes are continuing to moderate inflation. That means that the inflation report, the last major domestic data release before the RBA's 10-11 August policy meeting, prompted financial markets to largely rule out an August interest rate increase, so no price increase. However, policymakers are still expecting to maintain a hawkish stance, with the possibility of further tightening later in the year should inflationary pressures re-emerge. Meanwhile, ongoing geopolitical tensions in the Middle East continue to support the US dollar as safe haven appeal, adding further downside pressure on the Aussie as the USD, which measures the greenback strength against a basket of six major currencies, sits at 101.28. Markets are now focused on the Federal Reserve's policy decision, which will soon be updated, with rates widely expected to remain unchanged at 3.5% to 3.75%. Following then, all eyes will be on the US GDP and the core PCE inflation, which is the Fed preferred inflation gauge, which may give further clues on the outlook of the US monetary policy. So looking at the technicals, they are negative, and the MACD is turning over under the zero, which could imply further negativity and therefore look towards the region, not 69.25, because we're now taking out 69.65, but more to around 68.70, where I've outlined here, and reassess. We could get a correction from there, but the technicals are somewhat heavier, even on the weeklies. As you can see here, it's given me some concern, but one step at a time. Let's see how this market plays into the downside and see if we get a bullish response like we did back in June. The euro, while the market did respect that key level of 113.40.60 area, and it's finding a little bit more momentum, but I would like to see stronger candles, and they're not being produced. Therefore, could see a return back to the downside. If we see a failing of a hold, that is, of 113.40, then we're looking back to lower to 112 and reassess. Having failed to get the tri-star doji, which is still very close to this pattern, the market is turning negative as the RSI drops. I am still in favour of a downside move, and if we do see a break of 162.70, then that would look towards 161.70 to around 160.35.75, which is what I prefer. Sterling back to the bottom side of this range, if I outline it, which is around 132.35 to 45 area. The technical outlook appears to be picking up, and let's see if it does, but I'm still concerned of this support, because if it does break, then we are looking back to the lower side of 131 that we saw in June. Wrapping up with commodities, well, the market's still holding steady, but that could all change after the main event, which is the Federal Reserve's policy decision. But keep an eye on how this pattern unfolds, because it does still hold bullish since the break of the trend, and I'm still looking up towards the region somewhere of 4,200. And oil, well, the market plummeted, hit the target that was seen around 78.60, and finding a little bit of recovery now. If we do see this pattern increase, then we may see a move back towards 83.5 and reassess. Well, that's a wrap. Thank you for joining me. And as always, we have the interest report. I hope you enjoy the great start to the day.